Hello, I'm Heidi Pickett, Chief Business Officer with the TIE, and welcome to the TIE quarterly call with Tezos, focused on growing the Tezos ecosystem with RWA tokenization and gaming. Joining me today is Ben from Uranium.io, James from the Tezos ecosystem development in the US, and Nikolay from Sugar Gaming Studios. So just as a quick reminder before we get started, the information contained in this webinar is for informational purposes only and not intended as investment advice. Okay, with that all up front, let's dive in. Would love for each of you to introduce yourself and share just a high-level overview of your organization and how you're involved with Tezos. Ben, maybe we kick it off with you.
Yeah, thanks very much, Heidi, and great to be here. So Ben Elvidge, I lead Uranium.io, which is the world's first blockchain-based platform for buying and trading physical uranium. And beyond that, it's extending into other types of RWA tokenization, primarily in the alternative asset space, and even more specifically around commodities. So anything to do with RWAs sort of comes into my world, really. So great to be here.
Great, welcome. Nikolay?
Hello, everybody. My name is Nikolay, and I have been in the gaming and iGaming industries for 9 years, and I'm the CEO of Sugar Gaming Studios. So we're building a game saga called Sugarverse, and one of the first title that we have built is a Web3 Match-3 mobile game called Sugar Match. Sugar Gaming Studios is a Web3 mobile gaming studio, as I said, and we're building original Sugar IP, where blockchain is the infrastructure, and we focus on games that are fun before they're crypto-enabled. So this is the main thing.
Great, welcome. And I'm just going to give a plug out. If everyone's not familiar with Sugarverse, Sugar Match, and what you're building, you have a great YouTube trailer that I watched this morning. So everybody should tune in and check that out. And James, your role at TriliTech and growing the Tezos ecosystem.
Yeah, so James Dunavant, I'm the head of ecosystem development here in the US for the Tezos ecosystem. Longtime community member, but have now decided to come in and spend my full time pushing this forward. I'm working with TriliTech, which is the R&D hub, entrepreneurship hub for the Tezos ecosystem that's based in London. But with me, we're now putting boots on the ground in the US, given all the opportunity that seems to be emerging here, and excited for a big 2026 to get things going.
Excellent. Yeah, I think there's a lot to cover, particularly how the US is certainly opening up and becoming much more crypto friendly. So excited to talk about the opportunities as you see them on that front.
For sure.
So Ben, let's start with you, and would love to understand from an institutional buyer's perspective, where are you seeing the clearest product market fit in terms of tokenized commodities, and what's driving that demand?
Yeah, it's a great question, and I think product market fit is a moving target. I think if I break that down, the clearest product market fit today has really been around collateral utilization and greater efficiency and better infrastructure around posting collateral management, and that's why you've seen the explosion in the tokenized money market fund space, right? Is because it's those more effective rails as it relates to kind of collateral management, and we're seeing big banks like JP Morgan really moving into that space with their own blockchain, but we're also seeing quite a lot of use of public blockchains as well. Obviously, at the end of last year, State Street launched one of their money market funds on chain. So I think that's really where we're not illogically given the clear product market fit from stable coins. The next logical fit from an institutional perspective has really been around cash-like instruments like money market funds, that sort of stuff, and predominantly in that collateral usage rehypothecation space. I think the next biggest use case and what I'm really excited about is better rails and infrastructure and utility for portfolio exposure. And that's one of the big problems we were looking to solve on the uranium side, right? Is you've got two options, either very inefficient OTC markets to buy the physical uranium that settles in like 14 days, or you've got markets where there's only closed-ended investment trusts that don't do a fantastic job of tracking the spot price and have a lot more volatility than the underlying asset itself. And so in both of those instances, we think that tokenization, particularly around commodities, can play a big role in that product and create that and have that product market fit around effective portfolio exposure that also gives, with all of the 24/7 trading and the other aspects I don't think we need to go into around why blockchain rails are beneficial, kind of better balance sheet and capital efficiency alongside that. And we've proven that with uranium as well, in that not only can holders of XU308 get this great, 98% correlated to spot price exposure to U308 or physical uranium, they also now, as of November, can post that as collateral to borrow USDC. So it's not a either or option anymore. We're seeing how blockchain infrastructure can make it much more effective from a capital perspective. And that's predominantly been retail right now, but we absolutely see that being able to be done at scale at an institutional level.
Interesting. And sort of on the other side, Nikolay, for gaming, what do you see as sort of the most credible wedge today on Tezos in terms of what you believe can actually scale beyond sort of the crypto native users, which I kind of feel like has been an issue in the gaming space for a while now?
Yeah, there is an issue, and I think there are many issues. But Web3 gaming is something relatively new. Web3 gaming is I don't know, like 4 years old. And normal gaming, it was alive, and there are like billions of users out there playing games. And I think we're targeting the mobile gamers, which are the predominant player base. And what we think is gaming is the only category where millions of users will touch on-chain systems daily without thinking about it. So Etherlink, which is part of Tezos ecosystem, helps us with leverage with low fees and also predictable execution, and also strong tooling to support high-frequency actions like crafting, trading, upgrading, social coordination, and all those things. And if wallets feels like safe files, and the tokens also feel like in-game resources, not a financial instrument, then we will unlock the real mainstream adoption, where we are talking about not hundreds of thousands, but only in tens of millions of people playing those games. So my view is that gaming is the major mover for Web3 utility, and it's the everyday thing. So there is no other industry in the crypto that every day there are multiple transactions, and those are made in games.
And maybe just a follow-up question, because I know two problems that you've set out to solve is really around liquidity and sustainability. And how do you approach that? What are the problems specifically, and what's your solution?
So about sustainability, we have seen this like the major problem even before we started building our games. So we have pre-built them in a way that they're sustainable in the long term. And this is true. There are such games, just you never download the Sugar Match. And our game, what we have done, we have taken a game mechanic from another industry that is already working properly, and there is no problem with it, and it's the online poker industry. So what we have done, we have taken the spin and go mechanic from there, and we have a buy-in. So every match in our games, in all our games, but in the first game, which is called Sugar Match, it is PvP. So you're playing against other people. So you're not playing against the company, you're not playing against the environment, like he said, but you're playing against other people. And every player should enter the game with a buy-in. And when he enters the game, there are 3 buy-ins, and only one player wins. So the winner takes the reward, and the 2 other players, they're sponsoring this reward. So this is very important for maybe a big part of the crypto industry who are watching game projects, is that here you can see where your rewards are coming. And about liquidity, I think liquidity problem, there are many answers to this question, but I think the liquidity would increase a lot more when we have better understanding of all the rules that the big players, like for example Apple and Google Store, giving to the game producers, game studios.
James, want to bring you into this conversation. Maybe we can start with, just as a reminder, I know we've done quite a few of these webinars, and even webinars specifically on Etherlink, which is your EV compatible chain built on Tezos, but maybe just a quick refresher for new listeners tuning in, Tezos versus Etherlink.
So I think the first thing to think about is it is one ultimate system, right? It's a consolidated economic system and a consolidated security system. Tezos obviously is the mothership, the layer one, and then Etherlink provides EVM compatibility within an enshrined roll-up on Tezos, right? So it enables obviously that interoperability with the EVM landscape, but also the decentralized security that Tezos, the mothership, provides. So it's really a best of both worlds. I think it's really important for people, though, when they look at the Tezos ecosystem versus others where you have L2s that are controlled by multi-sig wallets and whatnot, that activity, revenues, all of those things should be looked at on a consolidated basis.
Got it. That makes sense. And in terms of your priorities in your role around growth across RWAs, gaming, or whatever else may be on your roadmap, what types of builders or institutional partners are you most focused on onboarding in the next 6 to 12 months?
Yeah, so I think to start with gaming, we have a good foundation that is being built, right? So we have good partners like Sugarverse. We have the AAA game Reaper Actual that is moving forward that we're really excited about. But within that, I would say nothing is off the table. My objective is for founders, builders to be identified and allow their ideas to be brought forth. And we would just want to be able to support them, whether it's a new idea or a platform that's really wanting to take their ideas to the next level with all the resources that the Tezos ecosystem brings to bear. I would say, though, within gaming, I think a very important theme that digital assets enable is simply being able to create more agility and dexterity in the natural journey. And so when you think about finance and kind of what people have been able to do, like with fintech platforms, with gamification, the legacy rails are very limiting in their frictions. But with digital assets, you can provide a lot of agility in the experience. And so there's still a lot of room that is available there for the nexus between managing your finances and gamification, right? Where games can come out of that, but be able to do things like investing, trading, and even your day-to-day money lifestyle that I think is a big theme that's available. And then as I think about, the broader RWA space, I would just say, so my background is really as a financial services specialist, started my career as a bank regulator, then as an investment banker on Wall Street, doing all financial institution work, and then as a institutional investor, all specialized, and then as a builder of fintech platforms. So obviously we'll spend a lot of my time there. And I think naturally, when we look at the overall economic picture, that's probably by and large, the biggest market that's available. But I think the key thing for us is about access, right? Digital assets enable access to things that are hard otherwise to get your hands on. But the first thing for me is access to Tezos itself, right? As we have this opening window, which we can talk about a little bit later as it relates to laws and regulations, there are many new channels that come available, capital channels for Tezos itself. And so I think about things like ETFs, ETPs, and then also the being able to get more precise positioning with derivatives, things like perps, futures, options that can flow to all channels, so institutional as well as for the individuals. And then I think uranium is a great precedent for us for a much broader theme, right? Uranium, great place to start. You think about things like rare earths and whatnot, that might be another place for us to extend. But as you look at the securities markets, there are also many channels that, you know, your average individual still has a tough time accessing. And so within that, it's things like certain elements of private stocks, even the bigger arena of private credit, and then things like high quality private equity funds, hedge funds, other alternative assets. We have legislation that's particularly geared toward that, where mainstream individuals, you know, the 90+% that aren't accredited investors now can access those things. And so digital assets provide the rails for us to be able to deliver that to the market. And so I think that'll be a big opportunity for us.
Yeah, for sure. And then I'll throw this out, and, you know, feel free, anyone, to take it. But as you think about, you know, what's the single biggest ecosystem bottleneck you would remove to unlock faster growth? What is it? Why is it a bottleneck? How would you approach that?
I'm happy to go first. So, I think liquidity for me is probably a huge bottleneck, but not in the way that people would think about it, right? It's not about trading volume, I don't think. It's more about that institutional grade sort of balance sheet depth when I talk about liquidity in this sense. So, like, really in the RWA space, you know, reliable market makers with transparent creation, redemption, and sort of that deep side pricing through cycles, and being able to absorb some of those minor risk shocks that we see in other asset classes, that things like the 10th of October don't necessarily demonstrate that the robustness of the market is there. If you don't have that, like in terms of institutional adoption, you're still getting huge, you know, disparity in terms of NAV pricing or net asset value pricing between assets on chain and off chain, which mean that risk and compliance departments will give massive haircuts and see them only as sort of level 3 assets, or assets that are treated in the same way as mark-to-market assets. And really, if we want to drive institutional adoption and get the benefit of all the great stuff that being on blockchain rails gives you, we really need to see the balance sheet liquidity coming into play, and institutions using that balance sheet to drive other derivative products and creating that depth in the market, so people feel more comfortable trading at size. Goes hand in hand with privacy, but again, not complete privacy. But when we think about transactions and how that operates in off-chain markets, bringing some of that on-chain in terms of, you know, dark pools and the like also is something that I think would really unlock institutional adoption in terms of my specific area of focus around RWAs.
I agree definitely that liquidity is one of the obstacles and the bottlenecks of the ecosystem. But I think if we presume that we're in a bear market, there's going to be like a cleaning event, and then the liquidity in the real projects with real products and not just speculations is going to be much higher. For me, as a gaming developer, I think another thing is the bottleneck, and it is the wallet UX. And I think not just we don't need just better wallets, but fewer moments where users are forced to make like some decisions. For example, seed phrases, gas concept, all those network switchings, those are growth killers for our consumer products. And I think once the wallets feel like a background instrument rather than something, a risk like in the front end, so then everything will accelerate: the retention, the monetization, the trust in the users also.
So is that something you're specifically addressing, is the wallet UX experience?
Yep.
James, I don't know if you have anything to add on to either of those comments.
I think from a financial system standpoint, probably the big animal in terms of full potential is simply capital flows, being able to allow all forms of institutions to come into the market at will. And so obviously there are a few things that need to happen with that. Within the US, we have legislation moving forward that's going to be very important. Hopefully that gets done on a federal level in the first quarter. But there's also the ability, I think, for the largest institutions, when we think about like pension funds and endowments, to be able to look at the fundamentals and have a valuation framework so that they can act on their fiduciary duties. And so as you think about utility coming into play, I think legislation is a key part of that so that we can see utility scale in big ways. But that should also unlock the ability to look at these assets in more fundamental ways so that you can begin to have good valuation frameworks. And with that, I think we'll really be able to see that institutional capital come in and bring the whole ecosystem to its full potential.
Yeah, and just building on that, I mean, certainly there's been a lot of progress on the U.S. front in terms of regulation, and you have a pretty suitable background to maybe opine on like what further is needed. What would you like to see in terms of like helping this institutional adoption, particularly from the pension side and sovereign wealth funds and what have you?
Yeah, well, I think that's important, but we're going through a sequence, right? And it's, if you think about that, first really was the technology. If we think about this from a real perspective, the technology has only just recently come into a place where it can be used at a broad scale level, right? When we think about utility, so we're getting there now. We can do that. And then we've seen regulatory guidance come into play. And in the US, that's been really important because you've seen things like the OCC open up avenues to get charters for banks whose core strategy is digital assets. So that's an unlock, but it's still just guidance. And then obviously we need to have the full legislation passed, right? And then we need to be able to have clear rules of the road as to what this is, how it should be classified. And that's where you get into the framework of being considered a mature blockchain. I think that's one thing that's really important for Tezos. And in my personal view, I think that we are most likely to be classified as a mature blockchain. If you look at the overall field of the protocols that can actually meet that standard, I think you'll see that there are very few. So in many ways, that'll be a clarifying moment for the market. And then we obviously need precedents, right? So we have had some come into play. We've had just recently the first crypto native securities brought out to the market in the US, which is very exciting. And then, I think a big piece is governmental use, right? So the federal government now is in active search for deploying digital assets through a lot of their problems they're trying to solve. And we're also seeing things on the state level. But I think if we have the governments begin to use these things at a production level, then that's obviously going to give a nice green light to the underlying institutions across the economy. And from what I can gather, that day is here. So I think it's just a matter of kind of coursing through these moments, but we're at the starting line to be able to use these things at will. So pretty exciting.
Yeah, and Ben, I don't know if you want to add on to that, and how does the more defined U.S. regulatory compliance environment change your RWA go-to-market? How do you think about that? How do you approach that?
Yeah, I think more clarity is always a good thing, not to use a pun given the way it's referred to in the US. But I think it materially reshapes who participates and how products scale and how products can scale, right? If you get that clarity in terms of the better delineation between and clearer lines between accredited and institutional eligibility versus retail eligibility, that means there's less ambiguity for allocators and institutional asset managers in what they can include in their portfolios and how they then further go to market in those funds. Also, the big piece, obviously, once you get the clarity onshore in the US, means you get this I hope and I believe we'll get a big shift from sort of offshore private placement type models, as we've seen predominantly, to more regulated broker-dealer and ATS channels. That obviously opens up a huge breadth of channels for folks like us with RWA products to market to and get access to those capital pools. And again, with that comes the much fabled and promised secondary liquidity, right? Just because you tokenize something doesn't bring that liquidity in the trading volume. Actually, the way you can interface and engage with those channels is what's going to drive that. And then, I mentioned it earlier around collateral usage, more use around collateral to support sort of credit repo and margin frameworks is going to be huge. And I think once you get the regulatory aspects defined or better defined, it opens up those capital pools to properly engage, because no risk or compliance manager is going to sign things off without that clarity.
So a little bit more work to be done.
I think so.
Nikolay, what opportunities in the US, or you can talk more broadly in terms of like sort of regulatory advancements and clarity around rules, what opportunities that open up in terms when you think about it from a gaming perspective?
So in terms of gaming, I think it's more about, as I said, the rules that the US government and the regulations that they're doing with the big companies that hold the whole market, which are Google and Apple stores. And this is directly linked with the US environment, because app stores are heavily influenced how we design games. And right now it's much easier to use, for example, off-chain game points rather than real crypto tokens, even though tokens would simplify everything for players and developers. And if app stores become more crypto friendly, especially allowing in-game token usage, it would remove a huge amount of friction. And it would help the entire industry move towards simpler and more transparent systems instead of workarounds that we're doing currently.
And Ben, regulations aside, when you are onboarding new clients or, talking with risk and compliance teams evaluating tokenized uranium, sort of what are the top due diligence questions do you get? Are there any like obstacles that you've needed to address in terms of how they think about this as a asset?
Yeah, for sure. I think the thing we spend most time on, particularly with compliance and legal teams, is just because this happens to be something that's traded on chain doesn't make it a different asset. It isn't a separate asset that you should think of like Bitcoin or any other cryptocurrency. It is what your XU308 is a representation of beneficial ownership to physical uranium that is stored in line with all of the relevant nuclear regulations and non-proliferation regulations securely at one of the 3 conversion facilities. It just so happens that the transfer and when you trade it and you buy it, the transfer happens on chain and that ledger's on chain rather than being sat in a database or a spreadsheet somewhere with a transfer agent. And so actually spending time to articulate the simplicity of the legal structure that we've got, and that's where a lot of due diligence goes in, is that, with XU308 and uranium.io, we don't have SPVs. It's not shares in an SPV. It's not a different asset that has a different risk profile. It is. And that's why we track the price so efficiently, because it is just physical uranium that you can buy. And most importantly, from an institutional level, if you have a converter account at one of these 3 facilities, you can take physical delivery by burning those tokens or instructing us to burn those tokens, which for anything in the commodities space is the bedrock of the commodities market off chain. And we think to really make a meaningful difference to that market infrastructure, you have to start by being able to have an asset that you can physically deliver, and then you build all of the composability and utility on top of that.
Very cool. And James, I know we talked a little bit about sort of other assets that can be, put towards this tokenization use. Sort of, what are you thinking specifically in terms of building on I'll say the success of the uranium.io, but, where's your next area of focus as you think about this? Or
Yeah,
Ben,
well,
either or.
Yeah, I think, Ben, why don't you start off on that, and then I can extend from that.
Sure. So look, I think really what we've proven with uranium.io and XU308 is a really effective and seamless blueprint that isn't using innovative law and structuring techniques. They've been around for hundreds of years. But applying them in this context and thinking about the problem from first principles has meant that we've really simplified that structure. The exciting thing is that structure and the problems faced in the uranium market that we think is solved by tokenization is also applicable to lots of other commodities markets, specifically metals markets. And so that's really where I look at it and think, well, it took us a long time to get to market with this. We've done all of the hard thinking. Actually, we should be able to expedite doing this with other metals and other assets. And so uranium.io doesn't just become a single place for just trading uranium. We need to do some rebranding work, of course, but you can trade other metals and other commodities there, which if we then can build out the volume and the depth in those markets on Etherlink, we then, as I said before, we then can look at how we integrate those other metals with Morpho and Oku, as we've done with uranium, and create greater utility there, which brings even more liquidity and volume. And then we look at perps and other assets and also other aspects across the commodities value chain. The commodities markets are so integral to the way we operate, not just within financial markets, but a society at large, that I'm really excited about actually using the power of the technology stack that we have within the Tezos ecosystem to really drive the whole commodities value chain on chain, to use some bad words, but that's really what excites me, is because you look at it and you take something like uranium again, because that's the live example we've got. There's a huge demand and supply gap in the market, and the only way you close that is by bringing more supply on board. But the big challenge has been getting capital into that supply side. How can we think about new models of financing and capital raising through tokenization to get more value into that supply side to really drive that up as well? I think becomes really quite interesting, and we build a whole ecosystem in its own right around commodities tokenization on Etherlink and within the Tezos ecosystem, which I think is certainly, with this wider remit I have around alternative assets, that's certainly where I see things going next.
Yeah. And so the first thing I would say on that is I think I echo Ben's enthusiasm for that space in particular. And as it relates to the US, look forward to working very closely with him to bring that forward here. We have the secular dynamics in terms of AI and whatnot that are driving energy and use of a lot of these core materials, but you also do have, the national security elements that are, one, making these things a high priority from a US standpoint, but also from a logistics standpoint are shifting the supply chains. And so as those things move, you simply have a more dynamic market, and it's going to create a lot of opportunity for instruments like this to be able to enable the agility of those supply chains, as well as the use and access from a financial market standpoint. And then, I think access for me is really the key word for 2026. So when I think about other particular asset classes for access, personally, I do get excited about being able to bring more democratized access to high quality, high return assets that people have typically not had access to. And so when I think about like some of the best funds out there that have historically performed very, very well, and only, the top percentile get access to that, we can enable broader access to those things. And then within the financial markets, if you just think about the capital structure, where do digital assets really provide the most utility? When you look at debt and credit, the nature and function of smart contracts can really facilitate the full functionality of that, and even enable more, I think, stratified structures. But then within the markets of trading, typically debt has been a bit less efficient, and then there's a spectrum within that. So if you think about a loan, for instance, oftentimes a loan is shared between entities. And so you get into things like participations and syndications, and we still do not have good interoperable frameworks to be able to host those syndications. I think that's a place that's very large where digital assets can come into play. And then you kind of go up spectrum there into the capital markets, and there are certain arenas that are less efficient. So I think about things like public finance, like municipal bonds, right, that are very, very granular. It can be a bit messy, but at the same time, there is a lot of utility to be able to create more interoperability, more access, better settlements, and simply better standards that we might be able to approach and help out a bit.
Ben, I got curious, what other commodities are in the roadmap for uranium?
Yeah, so I think there's two aspects to it. There's that kind of supply side piece around, maybe not necessarily uranium to start with, but other mineral rights and mineral extraction capabilities, and that's something that happens very much bilaterally right now, and making it an interesting and a more easily accessible asset class on chain is something that we think is quite interesting. But in terms of spot commodities, we look at it and we're saying, there's other metals that share a similar narrative to uranium about being critically important for industrial production, for moving to a green economy. So things like lithium, cobalt, copper, nickel, the list can go on. And then obviously the precious metals side aren't just, precious metals for jewelry, but things like silver, palladium, platinum also have industrial uses as well. So more to come from us on that. We're making some good progress there, but I expect by the end of Q1 you'll see at least 2 or 3 more metals, with more to follow in the first half on chain on Etherlink being traded. So yeah, it's looking around those metals that share that similar narrative in the first instance, but naturally it would be somewhat remiss of us if we've got these capabilities to not think about the precious metals where we see most demand. Certainly we saw a lot of demand for good reason in 2025 given the price action in gold and silver, right? So we're looking at those, of course, but we think there's more of a unique niche in that base metals sort of space and the more industrial metal side. So yeah, lots more to come there in the first quarter and first half of this year.
I think you're on the right way because those metals are outperforming crypto a lot currently.
Yeah, they also have the massive volatility as well there, right? So you see big drawdowns as well, which, I mean, the Web3, and that is an interesting dynamic actually, not to get too sidetracked, but, the Web3 community and investor base is not, is sort of not impervious, but somewhat insensitive to that level of volatility, right? Because oftentimes it's still less than most crypto, certainly in the altcoin space. But I think that from an institutional perspective, how you build assets on chain that offer those diversification benefits, like uranium, that doesn't have correlation with any of the major asset class, is really where you can drive the adoption, and because it is something that isn't that easy to get exposure to in the same way you could like gold or silver, where there are plenty of other vehicles and capabilities to do that, admittedly with less efficacy, I would argue, than you can get with tokenization.
I mean, RWA's tokenization, I mean, such a huge narrative over the past couple of years, and continues to be a big narrative going into 2026. You're focusing on the commodity space, which I think makes a lot of sense and brings a lot of value. What doesn't need to be tokenized? Because I feel like everybody's like, well, just tokenize everything at the end of the day.
Shall I take? I'll take this one as well. I think I got asked.
I'll touch on it.
Yeah, I'll go quickly because I got asked this question yesterday on a different webinar or an X Spaces, which is really, I think, stuff that is valuable in sort of bearer transactions. So jewelry. I personally feel like tokenization of cars and things, luxury vehicles and things like that has somewhat limited utility. And then, things where actually tokenization brings more counterparty risk into it than would otherwise be the case. So I don't think everything needs to be tokenized per se. I think there are a lot of illiquid kind of tradable finance. There's enough to go after as James was talking about earlier, with the thesis of providing easier access to a wider remit of investors, that I don't think we need to necessarily tokenize everything. And we've seen lots of attempts and things like fine art, but it's really about the why are you tokenizing it and assessing that product market fit. Why do people buy fine art? Why do people buy luxury cars? In some cases, it's for investment, and tokenization for that smaller audience makes sense. But I would argue most people buy a Ferrari because they want to drive a Ferrari, not for its investment return perspective. And so, how valuable is it owning a hundredth of a Ferrari? I'm not so sure, but others may disagree. It's very much a personal view.
James, Nikolay, anybody want to add on to that?
Yeah, I think I can add that everything that is on the exchange, so on every exchange, it's better to be tokenized. It's gonna be 4 times more efficient because normal markets are working just 25% of the time. This is something that is gonna bring 4 times more liquidity in perspective. So maybe not 4 times, but much more liquidity in all the commodities, all the stocks, equities, like everything.
Yeah, and then I'll touch on it a bit. I think when we talk about what should be tokenized, that kind of has multiple implications. So you've got lifestyle and ethics questions there, and then you have the utility function. And then I think you think about it on a time spectrum. There's been a lot of debate recently with the prediction markets as to whether certain instances should really be tokenized and what value that's adding to society. I think that's a good debate that's probably going to continue on in perpetuity and be a lot of fun. And then I think in terms of the time spectrum, it's really about where it makes the most sense today, right? And so I think about when you have a big asset that is more or less fungible, right? So it's kind of the same however you touch it. That is very difficult to access. Then that's the starting point, which is a good reason for uranium. And then you kind of go up from that. But I think as we go through the time spectrum, Ribbit Capital, which is a preeminent venture fund here in the US, they wrote a really good letter, I think it was mid-year last year, about the tokenization of everything, right? And that's really where, the AI dynamic crypto enables kind of the separation of reality and the AI-enabled digital realm. And so the utility for it over the long term is immense. And I think argues for kind of, yes, I buy into that, a tokenization of everything. I think it's then like, how do those tokens function? A lot there for us to figure out. But the spectrum as it plays out over time, to me is more or less absolute. I guess that really, to a degree, it doesn't matter a whole lot today. It's like, where do we start?
So it is January 8th, start to the new year. Would love to just, let's have a little bit of a look forward. What do your roadmaps look like? Nikolay, would love to kick it off with you and just, what are your key areas of focus? And if we fast forward to, a year from now, what does success look like for you?
Yeah, absolutely. So I think, and I already mentioned it, and I'm sorry about saying it again, but I think 2026 is going to be the whole year, or at least some part of the year, a bear market. And that's not necessarily a bad thing. I think bear markets show who was driven by hype and who is building real consumer products. So for us, the focus is simple. It's revenue, it's profit, and it's active players. And I think in the whole industry, if you see what investors are seeking around currently, it's exactly this. It's no more hype thesis, and they're making investments only on hype, but they're looking for real things like revenue and profit. So there is no lender of last resort in crypto, like in the in the normal economy. So I think weak projects disappear every cycle, and that's painful, but it's also healthy. So capital flows back to teams that are with real businesses and with real users. And I'm also confident that Tezos and Tetherlink ecosystem will survive the bear market and grow much stronger in the next cycle, because I think it's very stable.
And Ben, I know we've talked a little bit about sort of the roadmap and kind of how you're thinking about leveraging uranium.io to expand into other commodities. But, specifically, like what are kind of your top three, like, what's going to define success, if you
Yeah.
the roadmap?
I think we have a pretty clear view, actually, and I'm excited about this year for really similar reasons to what Nikolay's mentioned in terms of the bear market, right? Like at that point, people really will see the value of holding diversifying assets that they can hold alongside any other asset they've got in their wallet, and I think that's going to be a good impetus for uranium and other commodities that are uncorrelated and provide that sort of positive upside when everything may be falling, if we do enter that horrible bear market phase. In terms of what clear milestones we're looking at, I mentioned 2 to 3 other metals by the end of the first quarter. That's sort of what we look at in the short term. I also think, as we think about uranium, given we've got such a strong and well-established foundation, we've been going for well over a year now. How do we tap into some more of those TradFi capital pools while they're still working on the regulatory clarity that can, how long's a piece of string? And so one of the things that we can do with TradFi partners to provide that more efficient infrastructure around uranium trading and uranium purchases to tap into that. So look out for news on that front as well. And they're the two big kind of functional pieces that I see, along with the other kind of third-party projects, as I would describe them. So established projects or new project ideas that we can support and help bring onto Etherlink in the commodity space. But in terms of metrics and what I think success looks like, I really think it's about moving from, great ideas that work operationally, work for investors, work as we expect them to, into revenue generation. And that's really what I'm very focused on for this year is how do we take all the skills that we've learned, both as a team and also and what we've learned from a product perspective, and make it so that it does scale in a revenue generating capability. I think looking at number of users and TVL kind of they're a means to an end to really about what we want to do, which is making this a sustainable business that generates revenue, because that begets more people to want to replicate that and engage with that and do their own thing, which only benefits the whole ecosystem.
Nice. James?
Yeah, and I would say our goals are tied hand in hand in many ways. So you may sense some similar themes, but for me, it's really reiterating the idea of access. And I think that starts first with to Tezos itself through all of the channels where people might prefer, particularly as we have the largest institutions coming into the market. And I think Tezos will, be in a separated field in terms of its maturity, staying power, architecture, history, that allows it to be potentially in that classification of a mature blockchain. So we want to set up the rails for that to be available. And then as we go through our themes from an RWA perspective, it is again about access. So working with Ben and team with a lot of these, metals and whatnot that will be coming to market, making sure that the channels are open and working well in the US. So I think about, for Tezos and for the metals realm, the ETF rails are really important, somewhere that I'll be focused. But also very importantly, I think is the fintech sector within the US. We have a very broad and deep field here. And so you have digitally native end users, secular growth within those applications themselves. And we want to make sure that the things we have to offer are flowing through that fintech ecosystem for average individuals. And then as I think about, building, for me, for 2026, I want to be able to, find a multiple, let's say, of key projects where Tezos is particularly suited, both from a thematic standpoint, a utility standpoint, to support founders, get them up and going, and see new things come to life. As it relates to metrics, I think from a stateside standpoint, I'd like to see a doubling of on-chain activity, but that coming through things where Tezos is providing long and lasting utility to that activity. So that's a personal goal for me. And then the buzzword for me, I think, is ETFs and multiple.
Excellent. Well, very defined roadmap, some clear goals and metrics, and hopefully it's not a bear market, but if it is, I guess that's the time to build. So if people want to learn more about Tezos, Etherlink, Sugarverse, Uranium.io, what's the best way to connect with you? Where should they follow you? Which websites, etc.?
Yeah, for Sugarverse, it's sugarverse.io. And if you want to try our game, it's called Sugar Match. You can download it on any Android and on any Apple device. Also, you can follow us on Twitter and also Discord and Telegram.
Yeah, Uranium.io is fairly similar. We kind of put it in the brand name. Hopefully that makes it stick for people. So that's where you can find most information around what we're doing on Uranium.io. But we also have, we're posting regularly on Twitter. So XU308 or Uranium_IO. I'm on Twitter as well and post the occasional thing, albeit it's probably less interesting than from the Uranium handle. And yeah, keep a lookout for the things coming that will predominantly push out through Twitter, but also Reddit and other social media channels as well.
Great.
And, for me, for institutions, companies looking to interact, you can find me on LinkedIn, James Dunavant. Please reach out. Founders, builders. I'm also on X, handles Lone Wolf XTZ. So you know where to find me.
Amazing. Well, thank you so much, James, Ben, Nikolay, for joining me today. Exciting to hear what you've achieved so far and what 2026 looks like, and wishing you all success for a great year of building and adoption, and looking forward to seeing the results.
Great. Thanks, Heidi.
Very much appreciated.
Yeah, thanks for having us here.
Thank you.